What makes you so optimistic about 2024?
Well, our optimism really started going back to 2023, and I don't think the story has changed all that much. I think the world expected recession and an earnings meltdown in 2023, and we thought 2023 would be the inverse of 2022. We already got that negative reaction in 2022, and then we had better than feared economy and earnings and calming inflation, and the Fed peaked interest rates at about the levels that we thought they would, which are actually normal levels of Fed funds. And so when you look at the fundamental valuation and technical backdrop that really was quite good as we moved through 2023, it still is. And the only thing that shifted, I think, from a concern on our part is we had a contrarianly positive thesis going into last year, and now we're consensus. Everyone's come around to our view, and so you have to question, when everyone else becomes positive, should you be positive? And I think it's the fundamental valuation and technical data that gives us the confidence to remain positive. We don't think we're going to have crazy positive returns this year like we did last year. We just think it's going to be normal, back to normal. That's all.
You're probably a believer in history as well, Jeff, and history says that after a good year, we also just tend to have a good year, albeit with a little bit of weakness at the beginning. That data coming from Carson Group and many others. So history is on our side.
It is, and I think a lot of people want, we're as human beings, we just have this negativity bias. And so we're skeptical, can things continue? And you're right, if you look at history, the most common return category or cohort of returns in the S&P 500 going back to 1926 is greater than 20%. The second most common is greater than 10%. Rarely do we lose money, and rarely do we get little or no gain. And that's because normally the economy and earnings are running pretty nicely, and therefore it's a great time to invest. It's a good environment to invest. And so it's not unusual to have a nice repeat. That's for sure.
Yeah, I'm looking at some of the areas you like as well. Meta platforms. I mean, the stock has doubled, Jeff, more than doubled off its lows. Pretty much just went back to where it was, but still a heck of a run. What do you see there?
Well, it's interesting. So often people will criticize buying a stock at a 52-week high, and I've made more money, and our team has made more money over the years buying stocks at 52-week highs if they continue to, execute. And we actually just recently came into Meta. We took a look at the fundamentals, and you've got great cost control that's going on. You've got a nice advertising cycle, a political advertising year, and you're seeing pretty solid pricing, and they're nicely positioned within that advertising pie. It's trading at 20 times earnings, Brian, 20 times earnings, and yet we're looking at 30% growth rates as they control costs, and you get pretty good top line. There's not a whole lot not to like. I actually was concerned because we didn't have exposure to Meta. We had some of the other mega sevens, but we didn't have exposure until recently, and I wanted to close that gap. And thankfully, we did that before we had that nice 20% day just a couple days ago.